going to show you exactly the same strategy that I used to boost my credit score from 670s to 790s in 3 months. And why, you may ask? Because having a good credit score is crucial. It determines whether you can get approved for a loan or not and the interest you are paying. Your insurance company like Geico also use credit score to set premiums for auto insurances. And did you know that landlords even use credit score to decide who gets to rent their apartments? Your credit score is very important, especially when you are making a big purchase. Just to put things into perspective, here's Bob and David. They are both taking out a 30-year mortgage to purchase a house for $500,000. The only difference between them is that Bob has a 780 credit score and David has a 680 credit score. Guess how much David has to pay compared to Bob throughout the 30-year time frame? A whopping $90,000 difference. Yes, you heard me right. So stay tuned to this video because it's gonna save you a lot of money. The only thing you have to do to get a perfect credit score is to scroll down and smash the like button. No, I'm just kidding. But it would mean a lot to me if you did, and thank you for doing that. Now, with all jokes aside, in order to have a perfect credit score, we will first need to know how credit score is calculated. A credit score is calculated by different factors, just like your GPA in school, where they add math, science, history, and all the grades together. The first and biggest factor is your payment history, which accounts for 35% of your credit score. This shows whether you make payments on time and how often you miss payments. So make sure to pay all your bills on time and set the foundation for a great credit score. I recommend putting a structure or a system in place, such as using the reminder feature on your phone to remind you to pay your bills on time. A late payment can stay on your report for 7 years and can make your score drop like a rock. The second most significant impact is your credit utilization ratio, which is the amount of credit you use compared to the amount of credit you have. So let's say you have a credit limit of $1,000 and you spend all $1,000. That counts as a credit utilization rate of 100%. However, if you spend the same $1,000 with a $10,000 limit, your credit utilization will be 10%, which is good. Make sure your ratio doesn't exceed 30% because it will likely bring down your credit score. Another tip that I use is whenever I'm about to hit the 30% credit utilization mark, I just pay the whole balance off, regardless if it's due or not. Because if I were still trying to buy something, I could still use my credit card to gain the benefits of cashback and consumer protection. And to be quite honest, you should treat your credit card more like a debit card. Keep yourself away from getting into debt. The 20% interest on these credit cards is not something you want to mess with. The third is the length of your credit history, and that makes up another 15% of your credit score. If you use your credit score responsibly over a long period of time, that definitely helps you look credit worthy in the eyes of a lender. The credit score algorithm looks at the average age of your credit when coming up with your score. Notice here I said average and not the total. So my recommendation here is to build credit as soon as possible and keep your accounts open and active. So that way, even if you apply for a new credit line, it won't impact your credit score as much. Then fourth, we have the types of credit you have, and that makes up another 10% of your score. This means that the lender wants to see you can handle all types of loans. So not only managing your credit card well, but also paying off your student loans on time, your mortgages, your auto insurance, basically anything that will go to your credit report. And finally, the remaining 10% of your credit score is made up of your recent credit activities. If you apply for any lines of credit lately, the lender will do a deep dive into your credit report to determine if you are eligible or not. This results in a hard inquiry which will mark down your credit score 5 to 10 points. I wouldn't worry too much about this because it's only temporary. And after a few months, your score should go back up. So now that you know how your credit score is calculated, here are some of the strategies you can use to boost your credit score guaranteed. Also, by the way, none of this is gonna happen overnight, but if you do all this stuff consistently, it's gonna make a huge difference on your credit score over the weeks and months. You first need to view your credit score by signing up for free at Credit Karma or Credit Wise. This is completely free and it will give you a better understanding of your credit score. So that way you know which items can be improved. First, your payment history. This is pretty self-explanatory. Pay off your credit cards or any bills as soon as possible. A 30 to 60 day missed payment is easier to recover from, but it can still hurt your credit score. Whereas comparing to a 90 day, a missing payment can become a charge-off and be sent to a collection agency where they could call you non-stop to get you to pay. This is also called a derogatory mark. Try to avoid this because it could disqualify you from certain loans. But if you do have one on your credit report, it is always worthwhile to ask the lender to rework the term of the loan or bring your account status back to date, or removing any marks as a one-time courtesy. But before you do that, make sure that the debt actually belongs to you. Nearly half of all Americans became a victim of some form of identity theft. The second one is your credit utilization ratio. For the most of people, paying down your balance will have the most impact in the shortest amount of time. Another tip is to open up another credit card to increase your credit limit. Remember, your credit utilization is calculated as a percentage, so by increasing your credit limit, your utilization rate should go down. But please promise me, don't go on a shopping spree with the new credit card that you just applied for. The third is your credit age. Obviously, if you're still young, you wouldn't have a long length of credit history, but that doesn't mean you can't have a good credit score. During the early years of your credit life, focus on making timely payments and keeping your credit utilization ratio low. Don't close your oldest account even if you don't use it anymore. The average length of your credit history will decrease because of this. Put a couple dollar charges on the credit card and pay off the balance. And just keep the accounts open and active. Another great strategy to build credit is when you are just starting off, getting added as an authorized user on someone else's credit card. When you do this, essentially what is happening is their payment history becomes part of your own credit report as well. So if the primary cardholder has a positive payment history and keeps your account balance low, you may see a boost in your credit scores. However, if the primary cardholder doesn't have a good credit score or falls behind on any payments, that will hurt your credit score as well. So make sure you choose the right person to piggyback on. Also, one more thing to keep in mind is that as long as your credit score is above 780, in the eyes of a lender, you will get the best rate possible. So there's really not much difference between the 780 and the 850. If you found this video helpful, all I ask you to do is hit the like button and subscribe to my channel. And maybe share this video to someone who needs to improve their credit score. My name is Brian and I'll see you guys next time.